What is going on? How y'all doing? DC Woodworking, let's go. Let's Mars, g'day, g'day. M. Pepin. Hey Rick, Bitcoin gonna break the 25k, then 29k. Well, that would be lovely. Let's see what happens. What's up, Jack? This sweet man from a nondescript country asked if I sent him to BTC. He was sent for back. Oh, you should totally do it, Jack. Yeah, sounds legit. Sounds legit. What's up, Zigzag? What's up, Mr. Dino? Darth Buddha. Darth Buddha. ETH gonna break out? Well, we'll see. We'll see what. Look, I think a lot of answers will come once the stock market turns on again, right? Because today it was off because of George Washington Day or something. I think there's like a President's Day, they call it in America. So a public holiday anyway. So the NASDAQ was not moving at all, which means there's no influence, outside influence from the stock market to crypto. So crypto just chops sideways as we wait, which kind of sucks, but that's what the reality is at the moment. Matic has done exceptionally well. That's no surprise. Bitcoin made it on top of the 50 SMA. ETH should pop to as King of Vaults. 50 SMA on what, the weekly or the daily or the hourly? I don't know what you're talking about there, man. Weekly. Oh, cool. All right. Well, let's check them out. I'll dive into the moving averages shortly. Let's have a look. So Bitcoin, where we at? We're still in this neighborhood of $25,000. Still knocking on the door and waiting for like entry. There's been some brief flings above 25, but you know, these are just liquidity grabs slash, you know, bull trap type situations. So pretty much you want to be like, if you're not in it and you see price go above 25, that is probably the worst time to get in, because you could be catching yourself inside one of these traps, right? These wicks, they're all for just a purpose of clearing liquidity out, and no doubt rookie players, like people that don't have experience, get trapped up in these moves that go above. What you need to see is confirmation of support above that level. It was the same situation back here when we were playing around with 24,000. Who remembers that from a couple of weeks ago? You know, don't catch yourself going long above 24, like back in this area. That's the worst time. Just as we're dealing with 25 now, you know, don't catch yourself going long above 25. It's just, yeah, it's not the right timing, put it that way. For those that were looking to go long after or at 24, had you have waited, well, I mean, going long here would have been better, but at least if you had waited to go long at 24, when there was evidence of structure above 24, that would have served you better, right? Going long at 24 here and here, you know, you would have seen a rally that went up to test 25. So that's the kind of, you know, just be careful with resistance. That's all I'm saying. Don't go long at resistance and don't go short at support as a rule of thumb. You want to flip that. You want to go long at support and short at resistance, with stop losses in place, of course, not financial advice. So that's probably the safest way to go about it. And more often than not, that strategy is going to get you profits rather than losses or stop outs, right? Going long at support is better. I think finding a long at support is going to serve you better than expecting a breakdown, because levels of support and resistance more often get respected than broken, if that makes sense. Not saying that breaks don't happen. I'm just saying that over time, like, let's just boil it down to an example. If we go to let's see, the 4-hour chart. Okay. How many times here was resistance respected as resistance? Once, twice, 3 times. And how many times was it broken, like convincingly? Once here, and then arguably you could say again here after it dipped below. But you can see there's more examples of it being acted as support. It only has to break it once, right, to get past that level to where it's not in question anymore. But yeah, more often than not, things will respect support resistance. Just like all through here, like, respected support, respect, respect. Finally, we get a single break with a candle close that went well below. See how it's just like one opportunity to break? So being a breakout trader is almost like, it's kind of risky, really. I think if you're trading supports and resistances, you're going to have more chance of being correct in your trade, right? So going long at support and going short at resistance. This is why we have stop losses too, in case it is a breakout. The off chance that it's a breakout, you have a stop loss to, protect your capital. So right now, what are we dealing with? We're dealing with some kind of support and resistance as we're ranging right now. Remember, markets spend the majority of their time in a range. It's only for brief moments between ranges where we see like movement in price, like moving to the next level after a break. So if you boil markets down, this is how I see them. This is a market. It's a bunch of consolidation and boring with a brief moment in movement before continuing boring, and then a brief moment of movement continuing the boring, brief moment of movement continuing the boring, right? That's kind of how I see trading. Like, this is overly simplified, of course. But in these moments, these boring moments of ranging, right? This is where you can trade comfortably, buying support, selling resistance, shorting resistance, closing at support, right? If you want to be a breakout trader, you're waiting for all of this time to elapse, like all of this boring, ranging to complete itself. And we know that weekends tend to be like this. Weekends, I'm just going to abbreviate this, a weekend. Weekends tend to be like these fellas, right? These are usually what we get on the weekend. When the stock market's closed, crypto sort of just waits for it in a range. I've been circling the ranges for the last like 5 weekends now, and they seem to go around $1,000. These ranges, see these boxes? These have all been roughly around $1,000 in price movement on Bitcoin. This one was a bit lower. It was like 480 or 500-ish, right? And then the most recent weekend was 1,000. So back to this, back to these kind of weekends that we've been having. Remember, this weekend was a long weekend, so it's kind of still going. So we haven't closed out this weekend yet. It's a 3-day weekend. So yeah, that's kind of how I've been seeing it. So you can see 490 here. I've measured the weekend. Now, if we take a measure on our current weekend, we're just going to hide the drawings for a second and see where we're at, where the low existed and the high. Okay, so the high's up here, the low's down here. Let's measure that to the exact decimal. So look at that. $999.43, basically a $1,000 range to the dollar almost. So back on trend with how every other weekend has been performing. Cool. Now, if you class this as a 3-day weekend, which you very well may do, then this is the range that we've dealt with. So it's come all the way down to here, 1350. So it's been a pretty volatile weekend or 3-day stretch here, in comparison with the other weekends that we've had. And can you see the moves? Like the really impressive moves don't really last that long. Like quite brief here in time, quite brief in time. This happened pretty quickly, fairly quick there. This drop was a little bit more drawn out, which is surprising for a drop, right? Usually it's like the bears take the window, the bulls take the stairs. But anyway, a drop like that nonetheless. It was still fairly quick, fairly rapid, a lot of, volatility there. But, I mean, look at this one. This is, when it really got going, this all happened fairly quick, right? Now, it's only in the consolidations that are long and drawn out and boring, that we sort of, we get a bit fed up with these ranges that we get stuck in. I mean, this one here can be seen as a massive, like one big mothership of a range, right? That we got stuck in there. But yeah, right now we're dealing with a range somewhere between, well, right now, like I would update the range. I would call it, you're basically just smack bang between 24 and 25K, right? Until broken convincingly, I would be, and this is not financial advice, I would be looking for longs when we approach 24, and I'd be looking to close those longs when price comes back up to test 25K. I don't know how long that's going to last as a trend. Probably not for much longer because we've got the stock market opening pretty soon. But that seemed to be like the theme that we've been dealing with for the past 7 days. However many days this block is right here. Yes, there was some action outside of the range, but these are like outliers. You're going to have majority or bulk of the action inside of this rectangle. So this is how grid bots work, by the way. They establish a range or a rectangle, and they have a midpoint, and they basically DCA or open long positions on the low side and close those long positions on the high side, and vice versa. Open shorts on the high side, close them on the low end, right? So that's what we got going on. All right, so that's enough of a sort of a range analysis of where we're at. Obviously we've been talking about why our range high is the way it is, and that is because right here, okay, that's the range high. This is another range high. So there it is. There's the writing on the wall. The August high is significant resistance. Now I'm going to go completely outside the box here and talk about something that's way off topic. But I mean, it's probably going to help you guys too, right? If you notice, sometimes in my streams, I'll be a lot more sluggish and slower to come to the next idea or talk about the next topic. Bit of brain fog, I guess you could say. Now, you might or might not have noticed, like I mean, at least I feel it. I feel a bit more energetic this morning. I haven't taken anything, I promise. I always have a cup of coffee in the morning, but what is a primary driver behind brain function? What drives brain function? Is it oxygen to the brain? Is it blood? Blood, oxygen, water, good sleep, yep. How do you get Okay, when you've woken up from slumber, from good sleep, you're still groggy from sleep. Some people wake up with coffee, right? Coffee in the morning to get the blood going, like to try and get the blood going. It doesn't work totally like that, but I think what I've done this morning, which is something that I don't ever do, which I'm going to try and make a habit, but I've busted out the weights. I've got my barbell out and I've put 20 kilos on it, and I've just tried to do a couple of reps of that, and my heart rate got up pretty good because I'm pretty unfit right now. So it was pretty strenuous, but I just did some exercise, and the difference in the function of your brain after you've exercised, you would think the opposite. You'd think that you'd get tired after exercise and that you would be, destroyed for the day, right? It's the opposite. You need to, like, if you get the blood flowing in the morning, like, it's only going to benefit you for the rest of the day. Get that exercise in, get the movement in. It's going to serve you better for trading as well. Like, if your brain is functioning at its maximum potential, that's, don't you want to be making decisions when your brain's working its best? Why would you want to wake up and be still sluggish and tired and half asleep making important decisions with your money on the line? You know what I mean? So, yeah, I guess just doing things to improve your brain function, and there's many other aspects to brain function out there, but yeah, hydration's an important thing. But yeah, thought I'd just throw that out there. It's good. But yeah, look after your brain. It's very precious. It's a very powerful tool, and it'll serve you well if you look after it. Okay, so let's go back to crypto. That's my little rant, or my little pep talk about health over. All right, so there's the range. We've talked about the range. Let's turn to the next chapter. Let's go a bit more macro. So this was the 1 hour chart. I'm gonna just clean this up a little. If we go out to the 4 hour, to break this down, there's a lot of opinion out there, macro opinion of the global economy. So this is outside of crypto. This encompasses stock market, governments, GDPs of different countries, forex, everything, absolutely everything, right? A lot of people are fearful at the moment. They're still calling for this giga recession, which hasn't happened yet, hasn't started, but there's this threat out there. There's this narrative that we're supposed to go into some, doomsday situation. There's nuclear war on the table, and all this crazy shit. And that's not uncommon, right? We see that at the top of the market. People calling for outrageous moves higher. Like, you get the over enthusiastic people at the top, just as you get the over enthusiastic people at the bottom. And the reality, though, lies somewhere in between that, I would say. But yeah, so dealing with that, maybe that's why we haven't really punched through convincingly of this resistance as yet. But yeah, let's talk about the market structure. Let's boil it down to the real basics. I'm gonna hide. I have to pull these into. These should all go into a little folder so I can just turn them off. Bear with me. Didn't I have a TA folder? Oh, I've lost it. Anyway, all right. So let's go daily, actually, and let's analyze the structure. Just, you have to start basic. You have to start from a starting point. Remember how I was talking about ranges, by the way? And ranges and breakouts? Check out what we're dealing with. We're dealing with a macro rectangle, aren't we? Something like that. You could even argue that it's here, and that this was an outlier because of the FTX. you know, black swan event, right? So right here, like, yes, it was an extended period though that we were down here. Awesome opportunity for accumulation, no doubt. But yeah, look, this, just disregarding, I don't want to disregard it. This is why I've mentioned it and talked about it. But yeah, this did exist. It was a bit of like a cup or a double bottom type scoop, right? To some degree. But the bulk of the action, you can see the bulk of the volume has traded inside of this rectangle here. And we're still inside that range. So remember what I was saying, like, until you get a convincing breakout, you should be trading the range. And, that's what you should be more leaning towards. So going short here, obviously hindsight's 2020, it made sense to go short here. Just as, technically speaking, with this theory in mind, with this hypothesis, is if you go short here, that's not the dumbest idea, right? It's not dumb to expect some kind of retracement off the top of this range again as we travel down to some kind of support, like whether that be here or like, even down to the bottom of the range here, which is 18,000 for those that want figures. 18,000, like our mid-range, can you see how clean we bounced off the middle of our range and how it coincides with other key pivot areas? That's no accident. That's the middle of the range, guys. That's, things occur at the extremes and at the mid zone, the 50% retracement of a range. It's like high occurrence, right? And then everything outside of that is, it's just chop, it's just market activity, natural market activity, market flow, that kind of thing. So, but what we're dealing with, like, let's talk about trend now. So we've got our range defined. Trend. Let's see, this trend here, although it was an uptrend, the pullbacks were really significant. And the moves up weren't that much more dramatic than the previous move up. You see how much ground had to get covered to get higher? Like, I'm just using this as like a skeleton of the structure, right? I'm gonna put that over here. Now let's compare the skeleton of the structure that we recently did. And that's from here to like, let's just cut it in the middle here. And then to like here to here. Can you see the difference there? Our moves higher have been stronger and the pullbacks more shallow. So to me, from a move or trend perspective, this is a lot more bullish than this. This was gradual and careful consolidation up, with quite deep pullbacks. So the strength wasn't there. Compare it with this time, the strength is very much there. Like, there's a lot of strength in this move. So that although from a price range perspective they're quite similar, just the velocity is way different, and the timing is, if you're talking about, say, the bottom of the range, like that I have drawn out here, which is here, the bottom of the range, the bottom of the range. Let's redo this line so that we're talking about the same price levels. So here's the bottom of the range. We moved from there to there and there to there, right? So compare that with that. Look at the timing. We've done it faster to get to 25, right? And we've done it in 3 moves rather than like 12 or whatever this is. 1, 2, 3, 5, 6, 7, 8, 9, 10. Okay. Or 9 moves. 9 moves to get us to 25, 3 moves to get us to 25, and shorter time too. So it's very different market behavior when comparing it to this over here. That's significant in itself. I think that's worth talking about and seeing the difference. Not to mention, if we bring in the moving averages, right? Let's turn off the EMAs and just focus on the simple moving averages. Why is that the case? And I think the case is that we were still fresh off the back of huge downturn, right? A lot of fear and capitulation would have happened in this area, right? Whereas here, it's like, so there was a lot of liquidity to burn in this drop. However, in this drop here, it was shorter, and we spent longer going sideways and building, it was squeezing. So the nature of it coming up was totally different. It actually used this 50 EMA, or 50 SMA rather, and this is on the daily, as a launch pad, so like a support. Whereas here, it was nowhere near the 50. This was like a recovery move coming up, and then it started to use the 50 as support, chop below it, still lots of indecision, right? But then finally got above it, and then, capped out, found resistance at 25. Macro, you could argue that macro events, news events, CPI, federal funds rate, that played into why this level got rejected at that time, at that point in time. Had that have all stayed positive or just not a factor, maybe that's where this may have rallied, back up to some extent to these levels over here, like 30K, right? But look, that's what we got. That's what we had to deal with. That was the reality. So we came back onto the 50. It acted as, resistance, resistance, resistance. This started to get optimistic again. But then we had FTX, Black Swan event, right? And found ourselves, having to do this all over again, like build up a base to where we could, get back above. Now, look, we have a golden cross this time on the daily with these moving averages. And, I've said it in many streams before that this is like a lagging indication of what's happened already. And, we already know that price exploded in January. And this is our February report of that happening, this golden cross here. See, it's delayed. It's after the fact. So, so where are we right now? Let's go to the weekly, because I know that's been a bit of a meme as well, right? The death cross. That happened. It's only been fresh. We're only about a week into the death cross, right? But look, we're pumping into it. It's not causing a crypto crash, is it? Like I said, with it's reporting on old news. This weekly death cross is reporting on this bloodshed that we saw last year. So big whoop. I don't push too much weight or importance into golden crosses and death crosses. I feel like they're a bit of a meme, to be honest. Like, it gets the noobs going, but that's about it. It's not helping us in the short term, I don't feel. So I think daily, like if you want to know what's happening in the here and now, like obviously the weekly is a big influence, like it's a strong report on what happened and what the trend is saying and suggesting. But if you want to know what's happening here and now, you want to jump down to more so a faster chart, like the daily or even the 4 hour, really. Look, we death crossed on the 4 hour and we picked up pretty quickly, didn't we? Like it was a very shallow death. Like it was life support and then it came back to life, right? So that's how I see it. It's nothing to fear. I don't think a weekly death cross is really, at least at this stage, it's not saying much about what's coming. Because there's a good chance this could really just be a nothing burger, right? And come back up anyway, like this. And then we go bull, continue this bull trend and potentially see a bull market, but we'll see. Semantics, right? People get very hung up about the semantics of a bull market, but who cares? Like, just let's get with the trend more. Like, more importantly, what's the trend doing? It's a bull trend, right? And that ties back to what I was going to say earlier. Let's move these averages out of the way and talk about the moves. Like, what are our major pivot points here? We've got a low here. That's the lowest point we've seen in a while, right? Down here, 2022. We had a very obvious pivot just above 18,000 here. Okay, where's the pullback? Where's the most obvious pivot low? And it's pretty much here. Now from here, yes, we chopped sideways for some time. I'm not gonna like draw out these like sort of micro moves inside here. I'm only interested in pivots that break structure, break market structure. So this is all substructure because it's inside of two pivots, right? It's all movement that's happening inside of a range. I'm not interested. I don't care too much about that movement. I want to look at, okay, price getting above this pivot. Okay, now I'm paying attention. Now I'm looking for the next pivot. So it's more like here, right? Like that's probably the highest point at that stage. And then we're looking for, okay, there's another like smaller pullback here. Excellent. And it was significant enough to highlight it. You know, obviously I could be drawing it to here and making it more of a macro insensitive move, but you know, and maybe I will, maybe I'll change it to that. But anyway, look, let's just draw it like that and then go, okay, where's the next like really impressive pivot point? And that's here. Where's the next impressive pivot low? And that's probably like here. And now we're sort of like, okay, where's the next pivot? You know, it could be one of these candles here. It really could be, you know, like we could call this the next pivot, and then maybe the next one, the next swing low comes somewhere down here, or like, we don't know yet. We just have to wait and see. Or even better, maybe this move's not over yet and we punch through 25 and it's just like a brief stop because we're dealing with this resistance here on our way to 30, which is all the way up here, right? That could be a thing. So, am I bearish with a series of these lows? Like, what are these lows? Okay, let's call this the lowest low, or we'll just call it low. Okay, now what's the next pivot on the low side? We've got a higher low. Okay, so far so good. That's bullish. Higher lows are bullish. Higher low again. Bullish. Where's the next major pivot? Here. Higher low again. Bullish. Do we have a lower low yet on this time frame? I would argue no, we don't. It hasn't happened yet. So to me, that spells that this bull trend is still alive until proven otherwise. Now, to prove this bull trend, or to end this trend, you need to break this level, right? That is the previous low. That's the most recent low structure that we've had. So draw a line. I'll make it different so that you can see it. Make it yellow and dashed. Until we get lower than 21,000, if you want to get real exact, 21,350, let's call it. So 21,350 is the line in the sand, which is keeping this bull trend afloat. The highs don't matter. So these highs don't define an uptrend. It is the continual higher lows that define an uptrend. And it's the same in a bear trend, right? Just inverted. Let's invert the chart. It's the highs that define a bear trend. Now let me do these because they won't make sense right now. Let's just use this as an example. Let's pretend this is a downtrend because I've inverted the chart. And it's the highs. Remember how I said the highs don't matter in an uptrend? The highs matter in a downtrend. So you've got your high, you've got your lower high. you've got your lower high. You've got a lower high here. Not dramatically lower, but lower nonetheless. And that's, you know, that's the downtrend. That's a downtrend. Now, once you break that previous lower high, that's when the market structure has broken, right? Broken market structure. You've changed the trend. So it's gone from downtrend to uptrend. If you were to make your first higher high, because it's higher than the previous lower high, right? So that's the trend. The trend is your friend until the end. And let's analyze why last year's downtrend has been broken, at least on this time scale. We're on the daily chart. You know, it's semantics. It really comes down to, what do you call it? Now my brain's not working. It comes down to context, right? Context of time frame. So if we get the chart right way up again, I'm going to delete this because we know that this is an uptrend and it hasn't been invalidated as an uptrend yet. So cool. Awesome. We've established that. Now downtrend. All right, here we go. This was our bear market. We had a high. We had, you know, let's call this the low. Well, I'm just going to pick out some lows and highs, what I think are, you know, pivotal, if you will. There's some low there, like a new low, a lower high, lower low, lower high, lower low. Let's just chop all that structure through here. We've got a lower high. And this is where things started to get interesting because we came in here and pulled in a higher low. But remember, it's not the lows that matter in a downtrend, it's the highs. So the fact that we came in here and pulled in a higher low was no big deal. Like it didn't kill the bear trend, right? It was interesting. It was like maybe like the start of a warning sign, but by no means did it kill the bear trend. So there, lower high again, and then what do we got? We got a lower low again, didn't we? A lower high again. Ooh, but then look, ooh, higher low. Okay, warning, warning. Things are changing here. Like, just like it tried to change its habit here, we changed the habit here too. But then look, ooh, this was the shift. Okay, I'll just finish that out, round that out. Okay, this was the shift here. Since the start of the year, we've had, or since April, let's just call it April, right? We've had our high, we've had a lower high. Now, instead of me drawing this out, I'm just going to copy it. So copy, paste. We had a lower high, we had a lower high, lower high, lower high, and the last lower high. So what the hell changed? Like, why are we out of the bear trend? Because the bear trend is over. The bull trend has started, if you ask me, at least on the daily context, right? Remember context of time frame. From a daily perspective, we've gone from a bear market or bear trend, if you will. Let's just stick with trend because people get sensitive when you call it bear market, bear and bull market. So we won't play with semantics here. Let's talk about why this has changed. Remember, it's the highs that matter in a downtrend. So we have broken the last high, the lower high that we had. So we actually changed character. We had a change of character to the upside, and look, we've got a high here. Arguably, let's just call this the high here, even though this and this can be considered highs. On a macro perspective, this is like, you know, a high. So we've changed the combination here. You know, weren't things supposed to be lower highs, lower highs, lower highs? Look, we got a higher high. We broke that downtrend. I know that I'm making this like overly, it's like me over explaining it. Some call it mansplaining, but anyway, it's just to be clear, right? It's just for clarity. Because I think a lot of people just dismiss this, like they're just like, oh yeah, whatever. But it's important. Like the trend is important, right? Market structure, price action is the most important thing. So I think it is only fitting to spend an important amount of time talking about it. So that's the trend. Until we have broken these lows, like this is the combination that we're dealing with here, right? We've got a low, a higher low. See, now that we've broken, by the way, that lower high, now that we've got a higher high, which is a change in character, it's shifted what we're focusing on. We're now focusing on the lows because we're in an uptrend. Remember? So, downtrend, and I'll put it in like just normal writing, defined by the highs. Uptrend, defined by the lows. Which is kind of like, you wouldn't think that, but that's the case. Like that's what keeps an uptrend alive, is higher lows, higher lows, higher lows. What keeps a downtrending or alive is lower highs, lower highs, lower highs, right? That's just how it works. So now that we know that we're dealing with an uptrend. We just have to focus on the lows now. The highs are great. Like, you know, the highs are recipe for taking profits if you're in a long, right? Awesome. If we get a lower high, it doesn't matter. Like, remember, uptrend defined by its lows, not its highs. So the highs aren't totally useless. Like, they can hint at a slowing in momentum and, like, you know, the strength of the market has shifted a bit, right? Because the highs are starting to find resistance. We're getting like lots of wicks, you know, all that kind of thing. But yeah, it's really the trend that you want to be paying attention to, guys. So that's why I, at the moment, am bullish. That's why I'm seeing more potential for $30,000 than $20,000 right now. Until we get evidence that this uptrend has been killed or broken by this yellow dotted line here, you know, we should be aiming or, you know, projecting to in rhythm with the trend. You know, the trend is your friend. Like if you're expecting shorts, or if you're getting short here expecting a pivot, that's the fool's game, right? Trying to predict a pivot is more of a gamble, I would say. You want to be trading to trend. That's it. Until the trend ends, which is where your stop loss comes into play. You know, be with the trend. Like, don't trade against the trend, because that's when you get wrecked. Nice, plain and simple. Plain and simple. And remember this. You can apply this methodology to all time frames. You can do this down to 1 minute if you want, you know? Okay, 1 minute. What is 1 minute spelling right now? Like, I can identify two trends. I can identify a downtrend here and an uptrend here, right? Like that. Where's the pivot? It's right here. Like, if you want to talk about the most extreme point, the pivot, right there. You can see it's a V. You know, series of lower highs and lower lows. And then all of a sudden, bang, the structure gets broken. And we're getting higher highs and higher lows. So it's just basic market structure, guys. Like, that's all it is. The 1 minute is looking good. Until you know, we get a lower low. And what are the lows? Okay, let's boil down the 1 minute chart here. What have we got? We got a low, we've got a high, we've got a low, we've got a high, we've got a low, we've got a high, and then at the moment, this is the best we've got so far, is a low here. Can this low get lower? Of course. Like this move could be building up to do this, which is where this uptrend gets broken, you know? And why do we call that broken? Because it gets below this, and that's the previous low. Just basic market structure with the zigzags, guys. So there's a low. This would be hypothetically a lower low, which changed the character. So once you break the character, you switch what you focus on. So let's just, for hypothetical sake, like for explanation's sake, say we get this low here. Okay, now we switch focus on lows, because remember, in an uptrend, we're focusing on the lows. And then, okay, we broke it. We broke that pattern. Now we're focusing on the highs. So this was the recent high. We would focus on, oh, you know, like, oh, we got a lower high here. You know what I mean? And that would be like, okay, we're dealing with a downtrend now. So that's the way I see price structure and market structure. So right now, early days, we're still dealing with, you know, the current move. Like, you know, are we going to pivot somewhere here? Like, and this is where FEBs can come into play. Let's just use this recent move from low to high and draw a Fibonacci retracement to it, like this. We know that a full retracement back to this low would be a 1-to-1, right? Which is why the fib level is called 1 here. A 50% retracement would take us here, 24,800. So if we found support on the 50, which is a common spot to bounce at, if the trend is going to remain bullish, these are very common levels to bounce at, the 50 or the 618 fib level, which is the golden ratio. So yeah, that's how you look at this from a, and remember this, there's different fib structures within a move, right? So I'm just breaking down this move here. That's all I'm looking at. Okay, that's the move that I just broke down with a fib. Now, can I break down this move? You betcha. Of course I can. I just have to change the pivoting, and I'm looking at this now, the larger, like the overall structure. So from a higher time frame, you know, maybe we're looking at a bounce at 50, which would kind of coincide with like a retest of this resistance here, you know, SR flip, right? And what's another? Well, we've already got the daily candle close. Whoops, sorry, I missed that. We were 11 minutes into the new day, probably why we're pulling back here too. But yeah, like to stay bullish, like for this, remember this line here that I'm looking at, as long as our low pulls in higher than a full retracement, a 1-to-1, right? Like we can bounce at the 786 and remain bullish here. We can bounce at the 618, remain bullish, you know, so on and so forth, all the way up the line. Because it's higher than a full retracement, which means we've got a higher low. These are deep pushes down. If we smash through the 618 and go and reach for the 786, that's kind of like a sign of weakness, if you ask me. Like, if you want strength, you're going to get bounces at the 236 or the 382. Just an average, you know, average Joe kind of trend is like support at the 50 or the 618, right? But for now, like, look, this trend is alive. We're seemingly getting a pivot here, like on the micro structure, right? Something happened right there. It turned on a dime. And it's kind of like in no man's land. So it's probably not looking at this structure. We're probably looking at a lower time frame, like a smaller move, like probably this one. There you go, the 618 fib level. Yes, there's some wicking through there, but the bulk of the move has bounced at the 618 fib level. And there's criticisms of fibs. That it exists. There's people that think that it's all just rubbish, like the Fibonacci levels, and whatever. But because of that fact that you can change the context so easily. Like you can go, oh, but I was measuring here, or I was measuring down here though, but I was just measuring this move. Like, you know what I mean? Like you can change the goalposts, so to speak. And that's kind of my criticism on Elliott wave theory, because it's so subjective. Fibs are subjective to where you're tracing them from. I mean, you don't just go here, like in the middle of nowhere. You do pick a pivot, obviously. But yeah, it's not so black and white. There's some gray area with using fibs. Like there's some subjectivity, if you will. Like, it's by choice. Like which pivot are you talking about? Like what move are we measuring here? Like why are we looking for a bounce off the 50, from this structure, but not this structure? You know what I mean? Like that's kind of like how I see it. But anyway, kind of getting evidence of this uptrend staying alive here. Thank you, BGs, staying alive. High, higher low, higher high, higher low, higher high, higher low. What's happening? Like, are we gunning for another higher high here? Is that what's happening? Or is this the end of the line? Like, are we gonna actually, is this little up thrust here just bullshit? Are we gonna deal with eventually like that? Like, are we gonna get below that? That's pretty much. And look, that in essence is what we're doing on all time frames. We're looking at it. It's a different analysis. That was a 1 minute chart analysis, guys, for Bitcoin. It's going to be different for the 5 minute, probably. It's going to be different for the 15. It's going to be different for the 1 hour, the 4 hour, the daily, so on and so forth, right? That's the context. This is your context panel up here. 1 minute, 5 minute, 15, 1, 4, daily, weekly, monthly. That's context. It matters when you're describing what's happening in the market. From a monthly context, let me grab a longer term time frame chart. Let's get the index for Bitcoin up. This is the Bitcoin index chart. Let's make it naked so that there's no indicators or drawings on it. From a monthly perspective, and we'll have to turn on the logarithmic view to see it, that's a bull trend that has not been broken. What macro pivot, what low has got lower than the previous? None of them. It's just up. It's up only, guys. Bitcoin has been up only since its inception. People laugh about up only, but it is the case for Bitcoin. It has gone up only. Same with the Dow Jones. The Dow Jones is up only. Let's go to the DJI. Because remember, context matters. From a monthly context, Bitcoin's up only. From a monthly context on the DJI, I don't doubt it. It's probably been up only, right? And yes, of course, there's recessions along the way and pullbacks. Yeah, of course, we know that. But we're interested in the macro. Like, what is the trend? Okay, look, we're back into the 1800s, for God's sake. This is like, what is it? Almost 200 years of data. Not quite 200, but yeah. Maybe like 130 years. I don't know. Whatever it is. 120 years? 130? Something like that? Anyway. There wouldn't be too many more markets that have more data than this. Maybe gold has more data. But anyway, can you tell me that that's a downtrend? Like, macro speaking, I think you'd have to be an idiot to say that this has a downtrend in it. If you're just looking at the structure, yes, it's a series of higher highs and higher lows. Like, just boil it down, break it down, simplify it. Here's a low. Here's a high. Here's a higher low. Here's a higher high. Here's a higher low. Here's a higher high. Higher low. Higher high. Everyone's freaking out right now because we've come down to here. But look at the context of the market. It has been up only for more than 100 years, right? And look, yes, this was the Great Depression. You know, smack bang between World War I, World War II, we had the Great Depression. World War II happened. It actually created a lot of industry and manufacturing off the back of it. Economies were getting back up off their feet, on their feet after the World War II, right? So World War II volatility was all through here, right? All that chop. And then bang, explosion, baby boom, industry, like taking off. We had tech booms, so it's like, you know, through the 80s, even the 70s. I mean, there was technology that was coming out of the woodwork through the 70s, the 60s and 70s, right? There was a bit of a slump here. Don't know what was going on there, but that was like a decade-long range. Still tradable, but a decade-long ranging market. But yeah, after the 80s, like when inflation got under control, things exploded, and they were good. They were good all through the 80s, the rest of the 80s, and into the 90s. And then the dot-com bust happened here, right there. Pullback, still in a bull trend though, of course. Nothing has killed the bull trend. It's been up only. Giggle, giggle. And there's the '08, the global financial crisis, you know. It was scary, yeah. It was dramatic. It dropped a hell of a lot. But, you know, is it a threat to the Dow Jones? Hell no. It's not a threat to the Dow Jones. It's an opportunity. It's like, oh, I'm trying to get into the Dow Jones. Well, everyone knows that if you're trying to buy in a bull trend, you want a pullback. GFC was a beautiful, healthy pullback. You know, planting seeds on the bottom of the GFC would have been amazing because look, we got recovery off the back of it. The flash crash, the COVID flash crash, that created opportunity once again. Bang. The 2022 recession that we've come out of, that created opportunity. We bought, like, you know, some smart people accumulated during like the back end of the crash, right? Planting seeds for, you know, if not a return to a bull market, but a relief rally, bounce, right? Then damn, good on you. Like, well done. You traded to the trend. There's nothing wrong with trading to the trend. Remember, this is the monthly context. Remember, tying this back to what point I was making, it's context. From a monthly context, the Dow Jones has been in a bull market the whole time, pretty much. Look, the recession, I mean, the depression of 1920s into the 30s, that's something that got a bit concerning because it broke the structure. Like, we had higher lows, higher lows, higher lows, and then bang, we had a change in character, and we actually made a lower high too. So that's the biggest shakeup we've had in some time. The dot-com crash, at least for the Dow Jones, I don't think the Dow Jones felt the dot-com bust as severe as the NASDAQ. But look, the '08 global financial crisis was scary because we got macro lower, just slightly macro lower than the previous dot-com low, right? But we recovered fairly sharp off that, and we got back on track with what we were doing. So look, I don't think the Dow Jones or the stock market is under threat until we get below the COVID low. And is that happening? Not. There's no evidence of that yet. Like, I think that's just like a pie in the sky, you know, talking about extreme possibilities, not probabilities, right? Possibility. Possible, yeah. Probable, no, not yet. I don't see the evidence, right? There's just no chart evidence to support that. And that's the end of my rant about seeing that level in the stock market. I just don't think that we have the charts suggesting that whatsoever. Until we see it, until we see evidence, then we can start talking about it. But yeah, COVID low, is that what I was circling? This is what I meant to circle, because this is the GFC low down here, all the way down here. Anyway, let me get back to the YouTube land here. Sorry, good to be alive sends through £10. Wow. Thanks, man. Appreciate that. You are a great support to my channel. I appreciate the support there. And thank you to you guys that show up, like, you know, every stream. You guys are amazing. Appreciate your support, and thanks for coming in, and you'll keep me going. You know, if I had 2 people show up or 1 person or whatever, it's kind of like, why am I bothering streaming it? Why don't I just talk to them in a channel, like in a Discord group? But this is cool. I'm liking the 25 to 30 people streams that have been happening for the past 6 months. That's cool. And yeah, I haven't, well, that's kind of an overstatement. I haven't been streaming for 6 months straight. I've been streaming probably for 3 months straight, maybe 4. But yeah, it's cool. It's good to see the consistency. Appreciate the support of you guys. So thank you. And thank you for hitting up the like button. It looks like most of you have done that. Awesome. So yeah, what's happening now? Let's go back to crypto land. I think I've made my point about context, market context. From a daily perspective, so far we've got pullback. We're down, so we're 24 minutes into the Tuesday candle. It's pulled back a touch. Obviously the stock market in the US still has, what, 13 or 14 hours to go until that opens up. So yeah, I think things aren't going to get too dramatic until maybe the stock market opens. We'll see if that's right or not, but I think things should pretty much just hang in this area until we get, you know, the go ahead or the red light or green light from the US stock market. Let's check out let's go back to the 1 hour, because I just want to see what's happening here and now. Let's turn on the on all the pretty trend lines and things. I really should pull these into a group so that I can just turn it off and on. Anyway, let's do that quick so I don't have to keep shifting around. Now, to do that, for anyone that wants to know how to do that, just go into this button here in the bottom right. It's like a stack of pages. That is your object tree. And then you want to grab all the drawings and things that you've put up that you want to group, highlight them. Actually, they've changed it. You used to be able to highlight it and go create group, but they've changed that. So I think you just click on one and then hit this button, create a group of drawings, and we'll call this recent TA, which is how I had it labeled before. I don't know what happened. Anyway, and then you just grab the drawings that you want to put in there, and you have to sort of get that little blue line. Those weekend boxes, we'll put them in there too. What other events log? No. Okay, that's good. Excellent. All right, so now we've got everything in a box, which means I can switch it off and on. Price levels, key levels. Let's get the TA back on there. For lack of better, I mean, it's just a word. It's just a terminology, right? So what have we dealt with recently? We've dealt with a rising wedge, which played out textbook to the downside. Cool. We got a break here and we traveled down. All the while we were tracing out a falling wedge, which is textbook bullish, right? And we broke out to the upside of that. So 2 textbook patterns in a row. How lucky are we, right? Now, what are we dealing with right now? Arguably, if you want to get real, like wick specific, you could go this wick here, and let's just talk about the extremes. Let's go support, trend, lock that. Now you'd get a group of people calling this an ascending triangle, which is probably what I would call it. But then you'd probably get a group of people calling this some kind of weird wedge formation as well, or pennant, because you've got a high here and then a lower high here, like that. And then you would go resistance. By the way, these are cool. These are like little templates that you can select. I've pre-cooked up these little templates. So I've got resistance trend, support trend, depending on what ray type I want to draw. So my resistance trends are blue, my support trends are white. Now, if I go back here and just turn off as much noise as possible, we can see what I just drew. That's, you know, wick specific on the 1 hour chart. That's what we're dealing with. Those are the boundaries. And what is that? That's kind of like some kind of ascending wedge, isn't it? It's not a rising wedge, because remember, a rising wedge needs the boundaries to both be pointing up, whereas the top boundary here is pointing down, so it's not a rising wedge. A rising wedge looks like this, right? Something more like that, where both boundaries are pointing up. That's a rising wedge. A falling wedge are where both boundaries are pointing down, like this. That's a falling wedge. And the more you can get severe ones like this, right? But anyway, that's rising and falling. Now the reason, yeah, this is neither of those is because either these highs are flat along 25K, which is more of what I'm inclined to call it, is an ascending triangle, because the top is purely horizontal. So we can get that by turning the price levels on, because we've got the 25K line right there. And I would call that the boundary. That's the resistance that we're dealing with so far, 25K, 25K, 25K. Yes, we've had some wicking and some activity above it, but they're outlier. That's outlier. That does not represent price. Those are outliers. The bulk of the reality exists within this ascending triangle. That's somewhere in there is where the truth is, right? That's the truth. You could even say, okay, with that in mind, why are you including wicks on the bottom side? Well, then let's take the wicks out. Let's talk about just the bodies. That's the truth. The truth lies in that, right? We are squeezing to an apex, guys. There's the apex, right? That last little triangle wedge right there. That's the apex. I don't think that it's rare that you get price squeezing all the way up into the apex like that. Very rare. It can happen, but it's rare. You're going to break either this side or this side. And that's what we're dealing with right now. To pull this back to the so what now, the title of this stream, that's what we're dealing with. We're either breaking the support, like the little uptrend here, or we're breaking the 25K resistance. Those are the options. Let me chuck up a poll. Let's get a consensus going of what everyone thinks. We've got 27 people in here. Let's start a poll up. Will BTC, let's pose this question so that we got options. What will BTC do next? Question mark. And then the first option will be break 25K resistance, And then the second option will be break this support trend here, this trend line here. And I'll put that as option 2, break the support trend and go lower. Or just comma, go lower, because I'm running out of words. It only lets you type out so many words. All right. Let's get that as a poll. There we go. Cast your votes. We've got 27 people. Let's see how many people can will actually vote in the poll. I don't know if polls work on the phone. They should, if you're on mobile or whatever. Some people might be watching on TV, which makes it hard to cast votes on a poll. I totally understand, so don't worry. Okay, interesting. My take is that I don't know if you can change your vote in this. Guys, try to be honest. Like, regardless of what you see as the results coming up, try to just do your own unique answer to this question. Like, try to put all of influence of other people's opinions outside the door. Like, this is you. This is your time to shine. You tell me what you think is going to happen next, you know? Don't be a sheep. Make a pioneering answer. Like, this is your decision. This is your call. You make the call. Ignore what the group, what the majority is saying. Ignore everything. Just go off what you think, purely. Let's see what happens. What's up, hey Noodle? Let me catch up on some of these comments too, by the way. Okay. Geez, sorry, I've been kind of neglectful once again today with the comments. I'm just gonna. I won't read them out. I'll just give me a couple of minutes. I'm gonna read through here. If I see anything good, I'll read it out loud. Let's turn the music up a little bit while I do that. DC Woodworking says, Rick, I'm doing 75 hard. You should try it on day 34. Walking my 40-pound vest right now. Holy shit, man. Well done. That's like 20 kilograms. 40 pounds, roughly. That's hectic. Movement, meditation, music. Yeah, man. Definitely doesn't hurt. I've never heard anyone complain about, oh, God, movement's bad for you, or God, meditation's a joke, it's bad for you. Music, oh, don't listen to music, that's bad for you. So great things, movement, meditation, music, the triple M. Going for the Hugh Jackman look. Yeah, why not? Hugh Jackman. How can we buy your vitamins? Yeah, some people seeing that that wave structure on Bitcoin as some kind of Elliott structure, which is interesting. Love to see like a. I might have to do that later today. Check out some of the Elliott wave channels and see what kind of count they're playing with now. Now that we've had this bounce from 21.5. Like, what are they calling a wave 1? What are they calling a wave 2? What's a 3 and what's a 4? Like, has this been 1, 2, 3, 4, and now we're dealing with wave 5? Is that what... You know, I think that's reasonable. Just from a complete Elliott wave noob like me, that seems like it passes all the laws of Elliott wave. Like, your 4's not going below the 1, and your you know, your wave 3 is the tallest so far. It's definitely taller than wave 1, so that's legal. This to me looks like a 5 waves impulse structure, yeah, no doubt. You know, and we're currently seeing what wave 5 will do. And yeah, wave 5 certainly could have its top at 25k. Yeah. From a FEB extension perspective, you know, those people that like to do FEB extensions, whether you're drawing it from here, let's just go from here up to here, pulled back to here. Let's just get the defaults. I should make a new default. This is ugly. Extend lines right, get everything on the right, and turn down those background colors because they're kind of distracting. Okay, and then let's just leave it like that and save this as a template. Save this as FEB extension. Save. Okay. And now when I do a FEB extension, I can pick out a template. N wave is like price doing an N movement. FEB extension, this is just showing all the possible levels that you can achieve. So right now, we haven't quite met the 0.5 FEB extension just yet, based off this move. The reason a one-to-one target, like a pure one-to-one FEB extension, is so high up here is because of the length of the first move. This was a very impressive move up. And by the way, wave 5 can be taller than wave 3. That's also within the rules of Elliott wave, right? More often than not, your wave 3 is going to be the longest and most impulsive wave, but as long as it's not the shortest, wave 3. And it's not, because wave 1 we know is like very small compared to our wave wave 3. So we've already got permission to make this seemingly wave 5 taller than wave 3 if it wants to be. Like, it can go anywhere, really. We could go to 30k, like, honestly. I think that's definitely on the table. But let's just play it day by day. Let's just go level by level. Let's not get ahead of ourselves, because, you know, 30k is still a ways up. But yeah, that's interesting. Fibs and Elliott wave are definitely always interesting to look at. I'm just going to monitor this on the 15-minute time frame. How did that 1 minute go? Oh yeah, we definitely got a higher high. So that trend continued. Bitcoin's up for the day so far. Very marginal, but it's up. All right. So how's the poll going? 13 votes. That's pretty good. About half the people voted so far. Most people think the support trend's going to break and we're going to go lower. Okay, interesting. You know, we are dealing with bearish divergence on the daily time frame, and it's very nasty. Let's open up some oscillators here. Let's go to the daily, and I'm going to hide these two fellas, and let's reset the chart. Okay, there we are. Check out that daily bearish divergence that we're dealing with right now. Now, does that mean that we have to crash back down to 15,000? No. Bearish divergence just means that this move has run its, like it's on borrowed time. That's what this suggests, this bear divergence, right? We had a bunch of it here even, like right there. How did we deal with that? We tried to deal with that with this dip here. And it kind of did, like we reset the oscillator back down here. But now this recent higher push in price, we've got higher, but the RSI doesn't like it. It's not reflecting that same strength as the price is reflecting, is showing rather. So price is showing strength with a higher high, but the RSI is reflecting a lower high. So it's in disagreement, or as we call it, divergence. It's divergent. So yeah, that's something to pay attention to. From a 2-day perspective, even from a 2-day perspective, I can see bearish divergence. From a 3-day, yeah, still bearish divergent there. From a weekly, there's no bearish divergence just yet on the weekly. It's all natural. It's all healthy, I would say. Is the stochastic RSI cooked on the weekly? Yeah, it is. It's high. Can it stay elevated for an extended period of time? Yes, it can. We've seen evidence of that. Look, here. That lasted like from basically November all the way through till mid-January or early January. So, and like back here, look, this is what pulled us out of this bear market. Was, remember how we came up here to 14K in 2019? Look, the RSI on the weekly stayed elevated to compensate for the fact that price was going up. So do we get a repeat of that? If price goes up, I don't doubt the stochastic will it just has to reflect that, and it just has to stay elevated and cooked, right? So you're not going to get too much enlightenment like looking at one indicator alone. You know, stochastic RSI is still great, but it doesn't have 100% of the answers in it. So that's the way I see it. It's just a piece of the puzzle. Same with RSI, same with divergence. Even just looking at divergence as a be-all, end-all indication of what's going to happen next, I think that's misleading or misguided. It is not the only player on the table, you know? It's not the only piece of the puzzle. Because look, if you take it to a different context, if you take it to a weekly context, there's no divergence on the weekly time frame. It's all confluent lately. On the monthly, we've got so much potential on the monthly perspective. Look, I mean, stochastic RSI has only just started coming up on the monthly after being underwater for over a year now. It's like 18 months. Stochastic has been down, not 18 months, more like, yeah, about 13, but you get the idea. 13, 14 months, it's been down significantly. And look, we've crossed up, and stochastically speaking on the monthly, look how bullish that looks. This beautiful cross, this really giant move up, and look, this K, I think it's the K line, it's one of them. The blue one has come up and crossed, it's crossed the oversold line back into, you know, our stochastic RSI range. So that's cool. That's healthy, I think. That's optimistic from a monthly chart. So yeah, I don't know. I can see reasons why this could still be alive. You know, I'm not, just because we've got a bunch of daily bearish divergence doesn't mean I think that the trend is dead or over. Like there's people out there suggesting that. But hey, look, in the same breath, I want to say, like, be cautious of it, because it could be the recipe for some decent correction. Just like we had a pretty decent correction here, right? That was decent. Like that, if you shorted that, damn, That was nice. That's a good move. Let's measure it. From this extreme to that extreme, that's almost 12%. That's a big deal for Bitcoin. For Bitcoin to move 12%, that's no small feat, right? It's almost $3,000. $2,903. It's almost a $3,000 drop. So yeah, pretty significant. But hey, look, we've climbed higher. We've come up almost $4,000 quite rapidly after this $3,000 drop. How long did the $3,000 drop take? It took 1, 2, 3, 4. It took 11 days, 11 bars on the daily. How long did it take us to go 4,000? 11 versus 3 days. 3 or 4 days, right? 3 or 4 days to go 4,000, 11 days to go backwards 3,000. What does that spell to you? I think the bulls are very much still in control at this stage. So yeah, let's wait for evidence. Like, until evidence suggests otherwise, I think things are still looking bullish to me. But yeah, I could be wrong. Let's see. Totally, by the way, totally happy to be wrong. That's part of analysis, right? You're not going to be wrong. Sorry, you're not going to be you're not going to be right all the time. Just as you're not going to be wrong all the time. Like, sure, you're going to get something right eventually. But yeah, 100% are very, like, rare. Like, you're not going to be wrong 100% of the time. You're not going to be right 100% of the time. It would be bloody unfortunate if you were wrong 100% of the time. Just wrong all the time. Like, nah, you're never right, mate. Don't even suggest anything. And yes, MSJS, we're still at the death cross on the weekly, but yeah, like I said earlier, it's not a big deal. I don't think that the death cross on the weekly is something to be quitting crypto over. You know what I mean? I think it's gonna get dealt with. All right, let me continue through these comments here. Sorry. Will Smith that like button. Thank you, Skywalker. 28 people in the house. What's up, 28 people? Deadlifts for the Bulls, squats for the Bears. Yes, sir. Gotta take the dog out and smoke a blunt. No worries, Mars. Darth Buddha. I think we rally hard, whole market, then hit the top of this huge range and fall like a rock. Yeah, well, if that happens, man, there's opportunity in both outcomes. That's the cool thing about the market. You know, you can draw positives from both outcomes, just as you can draw negatives from both outcomes. I mean, but it's like, what do you want to look for? Like, are you trying to find positivity? Like, is your life focused on looking for negativity, or is your life focused on finding opportunity and positivity? That's a pretty deep question to ask yourself. Like, what do you choose to focus on every day? Do you look for the negative shit, or do you look for the positive shit? You know? Are you living in fear? Are you living in caution? Are you a doomer? Like, do you focus on what can be wrong and the doomsday hypothesis? Or are you constructive and looking for opportunity to make trades? And even just in life, like, are you optimistic overall? Like, these are some pretty deep questions. And if you don't like the answer, maybe work on it. Work on yourself. How profound. All right. ETC's trying to head up right now. I agree, man. 24881, 24800 plus to me is like we're still knocking on the door here. We haven't given up 25k yet. Not just yet. I think it's still on the table. But yeah, look, with the poll there, it's most people think we're going to break support and go lower. Okay. Well, I'm totally open to that possibility. I'm going to end the poll there. So the majority of people think we're going down. And they could be correct. They really could be. We will see. That's the fun thing about these polls. We will see what happens. We call that pentatonic transitionary motivation, or transitory, sorry. Buddha. Ooh. Like that. Juan Diego Santos. Morning. Good morning. Now ETH finished the right shoulder of the inverse. I don't really look at Ethereum, but I can do that in a minute. 1 second. Quick, do some push-ups to get your brain working again. Yeah. I'm bad at push-ups. I can only do like 1, 2 at best, maybe. I could probably like, I'd be trembling by the second, push-up, I would say. I'm a heavy dude right now. I'm still a big guy. But yeah, I'm getting there. I think I've lost almost 10 kilos this year so far, which is 20 pounds, roughly. Something like that. Uptrend the like button, y'all. Thank you, Jade Cheddar. Let's not underestimate the significance of the resistance we're up against. Yes, I would. Yes, that's very intelligent and responsible, Let's Mars. So yes, agreed. This is a short-term moment of uncertainty. It certainly is. We're squeezing so hard, and that's because there's no decision yet. We don't have a direction. All we've really got is trend, and lately it seems to be that the bulls are in control of this trend so far, but we haven't broken resistance just yet. We're sort of still waiting. We're still waiting on that stock market to do its thing. I like when you show us fractal market structure, Rick. Do we see any of that? Oh, okay. Yeah, I can look for that. Give me a minute. I'm just going to get to the bottom of these comments here, just so I'm up to speed. The charts are, I don't even know how to say that. Apocryphal? Like, I don't know. I don't know what that means, man. The larger fractal shapes of the different market phases are more interesting to me. Hell yeah. Well, that's cool. Yeah. I like, fractals are interesting. What's up, D Johnny? How you doing, mate? Doge's XR penis. When moon? You buying crypto ever? Dude, I am. I'm always in the game. I'm in trades right now. Let's Mars. We'd certainly have a lot further to fall if we had a retrace as deep as the Great Depression. Oh yeah. Yes. If we had a Great Depression again, like relatively speaking, in same like severity, like god damn. We haven't seen, like, the closest we've come to the Great Depression was the GFC, and even that we recovered off the back of that, and it wasn't as bad as the Great Depression. The Great Depression was ugly. It was so bad. See, I think, I don't know, I'm no expert, but I'm pretty sure back in the day when the Great Depression happened, they didn't have the same contingency plan. Like, they didn't have the same, like, measures to recover as we do today. Today, finance, like global economic finance and control, is way different to back then. If we had the same level of sophistication as we did in the Great Depression. Maybe the GFC would have been more ugly. Like, you know what I mean? But I think there's a lot more protection and strategy and contingency these days to rescue economies and to keep things moving. You know, do you think that would be a fair statement? I think that's the case these days. I think we've come a long way in 100 years, hopefully, in dealing with disaster, in dealing with, you know, economic collapse. So yeah, I mean, the more we learn, the more the market learns. I mean, we've got AI now, guys. We've got a lot more sophistication. Let's just call it that as a generalization. Like, we are more sophisticated than we were 100 years ago when it comes to finance. Yes. Mars says, thanks for streaming so often. I missed a few of the streams back when they were sparse, but I've seen just about all of them since you started streaming daily again. Well, yeah, that's awesome, dude. I'm still unwilling because I can't commit to a schedule. I do have a job, and you know, some days I work an earlier shift, so like I'll be up and I won't, and you know, and it conflicts with my regular streaming time. So yeah, you'll just see out of the blue there'll be days where I'm just not on, and usually I don't stream weekends because not much is happening on the weekends. So I save it for the weekdays. The best days that I like to stream are probably like, you know, your Thursday, Friday. Wednesday, Thursday, Friday, they're like your peak. Like, that's when things are happening in the markets. You know, your US Wednesday, your US Thursday, and your US Friday. That's when things seem to really happen, at least lately, right? Mondays and Tuesdays are almost like you know, the back end of a weekend, really. Like, not a whole lot happens on Mondays and Tuesdays, but yeah, it's like, and that's not a hard and fast rule, but that's just like a trend that I've noticed. And if you read or listen to the ebook Trading in the Zone by Mark Douglas, he will talk about that. He will say most of the activity happens later in the week. So Thursday, Friday is when the smart money make their moves. They wait for the dumb money or the less sophisticated money to jump in and make their plays on Monday, Tuesday, and then the smart money will come in and wreck them, or trade against them, or you know, take the market in the opposite direction to grab that liquidity on the Wednesday, Thursday, Friday, or Thursday, Friday, right? So yeah, definitely listen to that. We'll read that book, listen to it, whatever you like to do, and you'll hear that. He'll make a point about that. So. Could this be called a bull flag or no? Eric. All right. For Bitcoin, could this be called a bull flag? Let's have a look. I wouldn't say bull flag per se. I'd call it more of an ascending triangle. But you know what? Like, whatever you want to call it, it has the same outcome. Whether you're calling this a bull flag or like a, you know, a bullish pennant, or you know, a bull flag looks something like this, like where it's got price action bouncing through a descending range like that. That's a bull flag. And like, you know, the smaller the flag, the better. Like if it's more like that, that's even more like powerful as a bull flag. Bull flags actually aren't that common lately on Bitcoin, if I've noticed. Like even this structure here was not a bull flag. This is like a measured move up, if anything, because it was a rectangle, and they call this a measured move up. When you get a rectangle and they're breaking out the top, that's a measured move up. But both have the same outcomes, whether you call it a bull flag or a measured move up or a bull pennant, whatever. they're all the same brand, like they're all the same genre of pattern, and that is a bullish continuation pattern, whatever you want to call it, right? Some real bull flags are like down here. There's a bull flag here. It's quite small though. You'd have to look at it on a smaller time frame. But yeah, that I would argue that that was a bull flag down there. And same with probably here. This was probably a bull flag too. Bull flags happen during really explosive and strong moves. That's when you get your bull flags. And that's why they're so awesome, bull flags. But right now, yeah, I wouldn't class this as a bull flag. I think it's an ascending triangle at the moment. This is a Bart Simpson, by the way. An inverse Bart Simpson. You've got a crash, followed by a consolidation, followed by a pump, which is unexpected, right? Bart Simpsons are very brutal. You know, this got the bears excited. This move here, where we like did that, they were like, ooh, hell yeah. We're getting ourselves a bear flag, you know, like, or a bear pennant, or some kind of bearish continuation where we drop out of it, right? Just like, I mean, we had a bear flag here. Look, this is a bear flag. Pretty much this, I would call that a bear flag. Not the cleanest, but yeah, I'd call that a bear flag. Because that resulted in a drop, textbook, right? And then we had another something or other, like maybe a measured move down, maybe you could argue that was a bear flag. It was like, yeah, there was some action outside of the flag, sure, but for the most part, yeah, a lot of the price action existed within those boundaries there, you know? So yeah, that was shaping up to be a bear flag, except it broke the opposite direction. So this is why you have to be kind of careful with patterns. They're not guarantees by any means. They're cool to see and everything, but like, yeah, you have to be careful with your expectations of patterns, guys. We're dealing with an ascending triangle here. Shit, this stream's gone almost 2 hours. Thanks for tuning in, guys, by the way. As always, appreciate the support. Where are we in the comments? Did I miss a day candle analysis? Should I go back into the board? Yeah, if you want to get macro analysis, like I do cover a lot of it in the start of the stream, so it's definitely worth looking at. But from a macro perspective, like if I'm to boil it down into like a couple of sentences, I would say that from a daily perspective, from price structure, market structure, we're in an uptrend. There's no question about it. We've turned a downtrend into an uptrend, and we have not yet broken that uptrend. We're waiting for the next step, yes, because we're consolidating and squeezing on the daily chart. This is the daily, right? But yeah, we have not broken structure to the downside yet. So the bull trend is intact. And, you know, you're not stupid for being bullish right now, really. If you're trying to call a top, that's kind of like gambly, right? But if you're trying to call a top, then so be it. Like, you could be right. But I think trading to trend is usually the good thing or the safe thing to do until you're stopped out and the trend changes, right? So anyway, that's my take on it. Keep scrolling here. Lots of people are saying Bitcoin back to 15K or less. I don't know. BTC halving in 12 months. I think we stay sideways or up and peak into 2025. Pack your bags or sacks. Yeah. Yeah, I've heard a lot of negativity still as well. There's a lot of disbelief still in the community about what we've just done, like push to 25K from a low of 15.5. Like, we've come up almost $10,000 on Bitcoin. That's crazy. Like, no one saw that coming. I didn't see it coming. I didn't think we would get this high this quickly, but we did. So Bitcoin is full of surprises. Hey Noodle says lower. Okay. I think it's definitely going to take a lot of effort to break 25k. 100% it's going to take effort. Yes. We can see we've been attempting to do it. Like the past however many days this has been. Like since the 16th. Or arguably the 17th. Like we've been trying to punch 25k and use it as support. And it just hasn't happened yet. You know, we're still in the neighborhood though. Still there. And we're seeing higher lows still. Like, no doubt about it. That has not broken yet. So this is why I'm still optimistic, you know, because there's evidence to be optimistic, right? Low, higher low. High, 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 high. Like they're all roughly similar. They're all fighting 25k. We can all agree on that, right? But there's a trend pointing up. This is why I'm bullish. Like simple. And there's no mystery there. Like there's no ooh, like I've got a secret, like I've got a secret stance that no one has. Like this is very clear and obvious. It's nothing. It doesn't take a genius to be bullish here, really. It's not some out of the box thinking. It's just very basic. Higher lows, higher highs. Repeated tests of resistance makes me bullish. The steep angle here of the support, it's fairly steep. I mean, just circling this overall structure here is a lot lower than this structure. So, you know, we've got a higher low. We had a low here, and we had a higher low here. That's, to me, that's strength. That's a sign of strength. But hey, look, you know, at the end of the day, maybe they're trying to make it look this way. Like this is the whole tinfoil hat. You know, this is the whole conspiracy about it, is that they paint the charts out to trick people and pull everyone in, right? And maybe that's true. I don't know. We'll see. The thing is, though, it's inconsistent. You can never say that, you know, like, oh yeah, this is just a trap, or oh, this is real. Like it's always changing. It's always evolving and changing, and it's only after the fact that you can identify if it was real or fake too. So it kind of doesn't help you. But yeah, we just have to wait and see, don't we? 25k is where the last attempt up got stopped and sent down to 15k. Lots of sales, I think, will come at 25k. Yeah, a lot of people fear 25k because of what happened in August. So I think, obviously, you know what I think is going to be the catalyst for the move? And there's no surprise here, the stock market. So when the stock market gets moving in 12 hours or whenever the hell it is, 13 hours, that's when we're going to know. That's when we're going to know, okay, look, now we can start formulating some sentiment here or a bias as to where we think this might go. But for now, I think we're going to... Look, I reckon there's a good chance we're going to chop for the next 12 hours. 12 to 13 hours, which would take us to here, roughly. Here on the chart. This is when the stock market opens. It's 12:30 my time, so it's roughly here is where the stock market opens. And when we start seeing what it wants to do. And look, the stock market gave us a pretty crappy week last week. It didn't really go anywhere. It just went sideways. It chopped. And kind of what was reflected in crypto, right? In Bitcoin. We chopped sideways. Like, yeah, there was some good moves in there, no doubt, but did we make any moves as big as this, or as big as this, or as big as this? No, we didn't. Not really. We've been diminishing. We've been squeezing down. So yeah, like we're squeezing up real tight. I'll tell you what, there's going to be something very dramatic happening in like within the next 24 hours, I would say. Maybe 48, but most likely 24. So let's see. I'm Good thing about music, when it hits you, you feel no pain. Yeah, usually. Unless it's really bad music. You've never been in a mosh pit. I have actually. I've seen Cannibal Corpse twice. I've been to Carcass. I've been to Opeth. I've been to a lot of metal concerts. I've seen Megadeth like 2 or 3 times. I've seen Slayer. Yeah, I've been in many mosh pits. It's good fun. Bear Week, Crab Week. It could be, man. It could be Crab Week. Songbird chart. Do it. What the hell is Songbird chart? Doge's XR penis. I kind of get the feeling, dude, that you're 17 or 16. Is that accurate? No offense. I just get the feeling. Just the style of communication that you choose is very, yeah, interesting to me. Anyway, let's Mars. Almost daily. I appreciate the like 4 to 5 times a week. Yeah, I was talking to Doge's XR penis about the mosh pit. Oh, okay, gotcha. With a name like Doge's XR penis, we have a comedian amongst us, guys. Yeah, look, you can tell I'm running out of steam here. There's not a whole lot more to talk about. We've gone an hour and 14 minutes past the daily close. How did the daily candle go anyway? Let's have a look at that. Awesome candle. Bullish engulfing candle. Look. Bullish engulfing because it closed higher than the previous red candle, or in my case, purple. We've got ourselves a little bit of a doji here so far, obviously, because it's only the start of the day. We're only an hour and a quarter into the current day. Still a bit of time to wait. But yeah, tomorrow's stream will be interesting because we're going to have a bit more context, a bit more answers about what's going on. I believe the futures market is moving though right now. Let's check the DXY as well. The DXY has been painfully healthy, like and slightly moving up, like higher lows, higher highs here over time. So not a great thing for the stock market or for crypto to see the DXY starting to perform strong. Kind of scary. So that could be a little foreshadow of what might be to come. You know, we could get a pullback. It could happen. But look, if I'm to pick a side, I'm bullish. That's me. Until proven otherwise. You might see me saying, like admitting that I was wrong in a couple of days, but so be it if that's the case. But I'm still bullish. Like I'm going against the consensus here. I know I'm going against the trend, like against what the community trend, because everyone's still fearful, everyone's in disbelief, so they think down. And I think there's evidence for it going up here, so that's my stance. US 500, that is the S&P futures chart. Let's see. Futures is slipping. It's coming down. Do we get a test of this trend line? Because we got a low here, a series of lows here. That creates a pretty deep line in the sand here on the daily chart for the S&P futures. Yeah, look, it really could. It could come down and back test. If it does it in one day, if it does it in 1 day or 2, it could be seen as a retest of this downtrend line and also a retest of this uptrend line. Because it's like, look, they've come a crossroads here. I think it would be healthy to see it come down and test that before maybe getting a bounce and then moving up again. I don't know. Let's see. Let's see. That's the S&P futures. Now S&P, like just the, you know, the one that conforms to the market open and close, the regular trading hours. That's this chart with the squiggles on it, seemingly. Get it. Trend line here. I don't know why, but I lost this trend line somewhat. Like, I must have deleted it by accident somehow. I'm gonna make it resistance trend, so it's blue. Hit save. Cool. All right, guys, that's pretty much it. I'm gonna wrap this one up here. Thank you once again for tuning in, and I'll catch you guys on the next stream. Be safe in your trades and have a good one.